Hello friends, in the series on the income tax cases, today we will discuss a very important case. The name of the case is FIL India Business and Research Services Private Limited versus Deputy Commissioner of Income Tax. This case has been reported in 105 ITR Tribunal at page number 82. The matter has been decided by Delhi ITAT B bench and the date of the judgment is 17th January 2023. In this case, on the basis of the tax audit report, the additions were made into the income of the assessee for the delayed payment of employee share of Provident fund beyond the due date which is prescribed in that act. When these additions were made and the matter was before the ITAT, it was the plea of the assessee that whenever these delays were there, in some cases some delays was beyond the control of the assessee, and those delays were due to the technical glitches of the online portal of the Provident fund. The assessee pleaded that I have issued the checks, I have submitted the forms for the deposit of the employee share of Provident fund, but this could not have been deposited because of the technical glitches on the online portal. So for this matter, the ITAT said that as far as those matters are concerned where there is delay, which is not due to the technical glitches, in all those cases, by following the judgment of the Honorable Supreme Court in checkmate, the disallowances should be made. But where the delay is due to the technical glitches, the matter is to be remanded back to the assessing officer, because in this case, the assessee was not able to produce the relevant documents like bank statements which were showing that there was sufficient balance in the account of the assessee when he issued the checks for the payment of the employee share of Provident fund, forms which were filled for deposit of employee share of Provident fund, and other relevant documents, that is correspondence with the authorities of the Provident fund. So for this limited matter, the ITAT remanded back the matter to the assessing officer with the direction that if he is satisfied that there were really technical glitches which were beyond the control of the assessee, then in those genuine cases, the checkmate decision should not be applied and the deduction should be allowed to the assessee. Friends, this case is very important in dealing with those cases where there is genuine hardship on the part of the assessee, that because of the circumstances which are not in the control of the assessee, the delays are there. So at least for those genuine cases, the harsh provisions of section 36 subsection 1 clause 5a should not be applied. In this case, one more issue was there. There was some income tax refund which was due to the assessee, and on that the assessee received interest. In the year in which the assessee received that interest, the assessee included that interest into his income and paid the tax accordingly. But when the assessment was going on for the year which is concerned here, in that year, the assessing officer said that the assessee has not included into the income of the assessee that interest which was due or accrued on the income tax refund which was received by the assessee in the subsequent year or in the coming years. On this matter, the ITAT said that it is clear that the assessee has paid the tax on the interest on income tax refund in the year in which the interest was received. So it is not lawful to again tax the assessee on the accrual basis of the same interest when this interest is accrued. Friends, the department is so illogical in demanding the tax on the income tax refund, on the interest on income tax refund on the accrual basis, because there is lot of uncertainty when this refund is due. Sometimes the assessee do not get the refund for a number of reasons. So calculating the tax on the interest on the income tax refund on the accrual basis is not justified. It should be taxed in the year in which it is received. And when it is clear that the assessee has paid the tax in the year in which it is received, so going beyond that, again taxing it on accrual basis is not according to the law. At the end of this video, once again I am repeating the name of the case. The name of the case is FIL India Business and Research Services Private Limited versus Deputy Commissioner of Income Tax, and this case has been reported in 105 ITR Tribunal at page number 82. The matter has been decided by Delhi ITAT B bench and the date of the judgment is 17th January 2023. Thank you, friends.